Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, coming up now, I've got Nick Santiago, President, CEO, In the Money Stocks, inthemoneystocks.com. Nick, thanks for coming back on the show.
Great to be back, Michael.
All right, triple Qs. We've got a big move that's happened already in the NASDAQ. Is there any more life in this thing, or do you think we're bumping up against something?
Well, I think we're bumping up against something right here. I do think there is probably a little bit more upside if we can consolidate, if the Qs can consolidate or form a little bit of a base. But I don't see the Qs getting significantly past the 71.50 level, and I already think around this $70 area, there's a fair amount of resistance as it is. So, maybe because of the market euphoria that's taken place with the new high on the S&P, we could probably trade up a little bit more. But watch for a big stall out around 71.50. And the reason why I say that is you have a lot of NASDAQ leading stocks that did not make new highs with the triple Qs, most notably, obviously, Apple. And then you look at Google. Google is, I talked about Google on your show in late February saying this thing is looking like it's ready to roll over. And sure enough, we moved down to around the 770 level. But it has bounced from there a few days ago, but it's not making new highs. When the leaders don't make new highs, that's a warning sign.
Yeah, you've been cautioning us about this for a little bit. All right, pullback level on the QQQ.
Well, right now, I think once you get to around the 71 level, I think the Qs can pull back to around $64, and that's going to be a potential nice bounce area.
Okay. Now, that level at that point, do you feel that this rally, this overall rally we've got, everything's participated in it, do you feel that this would give us ample gunpowder, if you will, to move forward going through 2013?
No, I really think, in my opinion, when you look at Apple, it's just a broken stock right now. Could it get to 460? Maybe 465, sure, but I just don't see the upside or the momentum or the strength in Apple. I think it could get up there. I think it could get a little bit of a bounce. But I think traders, if you're looking to buy Apple, it's really down at around that 365, 350 level. That's where you get really interested in Apple. That's where I would be a buyer with conviction in that stock. Until then, I mean, it's just a good day trading vehicle, to be honest.
All right, and Google?
Yeah, Google right now, it's coming down. It came down into that 775 level. This is a level I talked about on your show that it would get to. It actually went down as low as 768, and you're getting a little bit of a bounce. I think Google may get a little bit more of a bounce from here as long as the markets hold up. But when Google breaks, and again, when this stock cracks, this thing can go right back down to around 675, 670.
Okay. All right. Overall, though, I mean, before we move on to Bed Bath & Beyond, overall, the NASDAQ, technology, that part of the world, do you see that moving forward? Any legs on it as we go through 2013?
No.
Okay.
No. I really think that this is going to be the area where traders are going to want to short when this whole central bank money printing deal is over. And the reason why I say that, let me just explain it real quick, if I may.
Yep.
Simply because if you take a look at the triple Qs, which is the NASDAQ 100, really the best of the NASDAQ stocks, they have not made new highs. In fact, they haven't even taken out the September 2012 top yet, and that's showing weak relative strength. So sure, they're probably going to go test that September level, the triple Qs are, but this is going to be the area where you're going to want to focus on the short side when this market does roll over, and it will.
All right, and do you think fast? Do you think it would be a fast decline or one of those long, slow grinders?
Well, when you have this kind of money printing going on, you have the trend the trend that we're in, where the market just continues to grind higher. In fact, if you take a look at Friday's job number, it was horrible, but the market rejoiced over it because it means more money printing. You know, the addicts are getting more drugs. So in any case, bad news is great news, and good news is terrific news. So that's the kind of scenario that we're in right now. But when this comes down, you're going to watch those NASDAQ stocks. Technology is going to be the place to go short. In fact, last week I covered a short on EMC. I mean, I'm already getting into the short positions here left and right and making money on a consistent basis. So this is going to be the area you want to pick on when this market rolls over.
Okay, well, this is not a technology stock, but it's on the list today. Bed Bath & Beyond?
Yeah, I just want to talk about Bed Bath & Beyond because I just pulled a scalp trade off with this stock just a few minutes ago with my trading room live. So over 100 people caught this on the long side here just at the low of the day. We exactly nibbled in at 63.80 and we caught a bounce. But the reason why I do bring it up today is simply because look at this stock. It gapped up, and look at the big reversal. This stock has a move down to $59 all over it right now.
Yeah, nothing like an outside day bearish divergence. Yeah.
Oh, this was a stock that I gave out this morning in my trading room as a pre-market gap trade, and we caught that to the downside as well. And then we reversed and went long for this little bounce here just about 20 minutes ago.
Yeah, that is such a classic move. All right, we only have so much time. J.P. Morgan.
Okay, J.P. Morgan was a stock we talked about on your program. I said this thing would come down to around the 47, 46.50 level. That's probably where it gets a bounce, and you can see that's what's happened so far.
Yep.
Traders right now need to watch J.P. Morgan over the next 2 or 3 weeks to see what kind of pattern it makes. If this thing starts to go sideways, this is going to build pressure for further downside. So tomorrow, J.P. Morgan has an earnings report before the opening bell along with Wells Fargo, and I think this stock will tell us a lot tomorrow. But keep it on the radar. We get a bearish pattern, JPM is going to head down.
Okay, next on the hit list, Euro, EUO.
Yep, EUO is one that I gave out to my traders. We're going to look to short this thing at around the actual euro versus the dollar around the 132 level. If you take a look at the EUO, this is a two-time inverse euro play, and I think traders can get in this one around 1885.
Okay, so let me get this straight just for everybody else out there also. If the EUO goes down, does the price of the euro go up?
Yes.
Okay, I just want to make sure that you're looking for what kind of move here on in percentage moves on this EUO.
Well, I think we could probably pick up maybe 8 to 10%.
That's
on the EUO. If we get filled down there at the 1885 level, I think we'd get a move up to $21.
Okay, that's big. So if I'm long euro against the U.S. in the FX market, stay that way is what you're telling me.
If you're long the euro right now,
in the
when
FX
the euro
market
gets to $1.32, you want to get out of that euro.
Okay.
And get short.
So we could have a little bit more. Oh, okay, got it. Hewlett-Packard, HPQ.
Yeah, I wanted to talk about HPQ because this was another setup that we gave our members just 2 days ago. In fact, we had an alert out there even yesterday, bearish scenario, and HPQ sold off pretty nicely today. It looks like somebody came out with some PC sales that are not going to be as expected or whatever, a decline in PC sales. We don't even care about the news. But just a point I wanted to make about this HPQ, this is the importance of learning chart patterns. You could see we had no idea what the news was going to be, but yet we knew the stock was vulnerable to a fall. And you could see today it's down, and I think HPQ will probably go down to around 1925.
What about filling that gap at 17-ish? We had back there last
First off, you're going to have to go down to around that 1915, 1925 level. You got to see the reaction there. If you get a bearish setup there, you'll fill that gap a little bit lower.
Okay. All right, we're out of time, but before we go, tell everybody what they find when they get you on your room.
You come over to InTheMoneyStocks.com, and what you'll see is we'll give you all of our trade setups. You get to look at our screen. You get to see all of our charts, everything that we're doing each and every day. You'll get all of our swing trade setups. I think traders, are crazy not to come over.
How many trades you pull off today?
1, 2, 3, 4, 5, 7 trades today.
And let me guess, you ended the day so far positive.
There's not one loser on the board today.
Thank you. That's why you're on the show. All right, Nick, thanks so much.
Have a great day, Michael. Take care.
You too. All right, you heard it here. He won all the trades today. You need to get in the room. You can find him at InTheMoneyStocks.com. The guy's been with us for quite a while. You should hear some of these archives. He's threaded the needle from 1,000 points out time and time and time again. All right, on the other side of this break, we're going to come back with Norm Winski, editor and publisher of